Welcome to Talk Law Radio with attorney Todd Marquardt of the Marquardt Law Firm at marquardtlawfirm.com.
In the beginning, God had one law. Don't eat from the fruit of that tree. Then he gave Moses the 10 Commandments. And now we have municipal, state, and federal lawmakers that won't stop creating new laws. Laws that might impact you without you knowing it. So listen to Talk Law Radio every week, Saturdays at 11 o'clock in the morning, Sundays at 4:30 in the afternoon, and on podcasts everywhere, Facebook, YouTube, and talklawradio.com. This is the Sinners and Saints segment. You know the song?
Of course.
I love that song. So I talk about the sinners and the saints because I'm Lutheran, and Martin Luther is quoted as saying that the saints were sinners too, but they've been forgiven and absolved. Mm-hmm. And so I was thinking about this segment and thinking about your tax resolution, and I realized that it's a sin if you don't pay your taxes, because Jesus said, render unto Caesar what is Caesar's and render unto God what is God's. And so, you know, we all make mistakes. And if somebody doesn't pay their taxes, you can help them,
Absolutely.
Right? And then they can be forgiven and absolved,
Absolutely.
hopefully.
Yes.
Can you tell us an example?
Absolutely, yeah. So one of the things that is required for tax resolution is you have to have compassion, right? A lot of people that come to you with these tax problems, they are completely overwhelmed. They don't know who to turn to. They can't get the IRS to answer their phone calls. And so I have two cases in particular that I'd love to share. One is a business owner. He, was a business owner, very successful, but like I talked about earlier, we just don't know all the things that we are responsible for as business owners. So he accumulated about $760,000 in payroll taxes. So basically, he was taking the payroll out of his employee's paycheck, but he wasn't paying it until the end of the year because that's what he thought he was supposed to do.
Oh, wow.
And those payroll issues, they actually are 100% penalty. So that doubled it to almost 1.5.
Oh, my goodness.
Yes. So, we were able to negotiate with the IRS. He was able to make one payment of $80,000 and then $3,000 a month for the next 6 years. So a much better outcome. I mean, we saved him $1.2 million.
Wow.
So
that's amazing.
That was an amazing outcome. He was so relieved, and to this day, he talks to me like a friend all the time. I tell him, "Are you calling me because you got a tax problem?" He's like, "No, I'm inviting you to a barbecue." And then I have another that I spoke about a little bit with Joseph. So some of those, sometimes when you work for a company and they're going to dismiss you, which is something that is happening quite often right now, they'll give you a severance package. And one of my clients got a severance package. Most of it was stock and didn't have the knowledge to know that you shouldn't sell before you've been holding it for a year and a day, and got a $303,000 tax bill. So we were able to kind of explain the situation to the IRS. It was a little bit of a harder case just because she was a high income earner, but we were able to bring her down to about $40,000, no payments. She was able to make a one-time payment, $40,000, and everything went away, including all the liens on her house.
Goodness, that's a big difference, and how devastating to get that bill and to have a lien and.
Yeah.
I mean, you probably just feel like that the whole world's caving in on you.
Absolutely.
Yeah.
It takes so much mental space that people can't focus on their things, their family, their job, their career. It's, it's a burden.
Yeah.
It just reminds me, the tax law is very complicated, and why it's important to talk to someone like Anna, because just that difference of 2 days is short-term capital gains, which are very harsh, versus long-term capital gains, which are a lot more manageable.
Yeah, absolutely.
Yeah.
Well, and they probably need to have somebody act as financial CEO to help coordinate the tax planning and the financial planning and the legal planning and
that's where the
insurance and all of that.
That's where it gets powerful. We were talking about some ideas for coordinating, but the strategies working together are very powerful. Yes, definitely.
Okay, we have a caller. Bert, you're live on the air.
Hey, Todd. Greetings and salutations to you and your guests. And
Howdy.
just the old Hey, I have a question. I'm glad you have a tax person. I've been pondering this on and off for years. Due to my disabilities, when I was medically retired from the Army, they say I pay that I'm taxed for disabilities. Now, I haven't filed since then. Am I missing out on something? Should I start filing and putting just to file?
So if I understood correctly, you're receiving non-taxable payments from the VA?
That is correct.
Okay. Are you receiving any other type of income?
I just got my Social Security. And
Okay. So
but they tax that.
They do. They do. So a portion of your Social Security is taxed. So I would say that for that reason, you should file taxes. However, if you even if you don't have a tax liability, the statute of limitations never closes on a tax return until you file it, and then it closes 3 years after for them to be able to assess additional taxes. So sometimes even if it's just going to be a zero return, it's really nice to just close that chapter so that the IRS can't go back and say, "Oh, we found this item from 2025, in 10 years," and start bringing that up, especially because in 10 years most people do not remember like the things that were going on. So that would be my advice.
Well,
Yeah,
great.
we would never advise somebody to not file a tax return, probably.
No, that's what helped clarify. So I should go to like someone like you, and then should I start filing all the way back from 2014 when I got out and got the letter of non-taxable?
So the IRS only requires us to file 6 years back. A lot of people don't know that. However, it's that statute of limitations that I told you about. If you want to close that book, then getting them all filed is the best idea. And you can give us a call. We can definitely help you out. We are very, very helpful when it comes to veterans, as me being a veteran myself. 210-500-0098.
Thanks,
Well,
Bert.
hey, I got one question, Todd. I mean, a comment. You said why there are lawmakers. It's like, well, I call Washington, D.C. The D.C., I say, stands for the District of Corruption. And,
That's funny, Bert. Thanks for the call. We'll talk to you later.
all right, bye now.
Okay, well, I want to switch gears a little bit. Y'all have babies at home, and
Yes.
and so it made me think of the Trump account for babies that are going to be born this year and next year and in the future. How does that work?
So basically, when a child is born, they get a deposit into their account, and the details are not solidified yet. But basically, that deposit is meant to grow tax-free until they use it for either college or can convert it into a retirement account. So the advantage of that is that everyone gets it. But if you are below a certain income, then you will receive additional contributions. And I think it's really great because it's a way to bring lower income people into a better situation, especially those children that need that money for whatever it may be in the future. So really great idea, DJ Trump. I like to call him DJ.
Oh, DJ, that's
DJ
fine.
Trump.
Joseph, I was wondering, do you know anything about it? Like, what is this account? Is it like with Fidelity or Vanguard or with who?
My read on it, and correct me if I'm wrong, is that it probably would be with an investment company, and that you get that bonus for certain, depending on when you're born. My daughter won't get it. She's going to be 2, based on my read. But my son, Luke, will be able to get that money because of when he was born, just like a few years apart. But it's almost like a retirement account is how I saw it, that you can fund without earned income. That was basically my read of it.
Okay.
Yeah.
Well, I think it's funny. I don't know what the reason was for it. I mean, other than what you said, to help low-income people turn money over to an 18-year-old, so that there's a savings account that you can't get into, I guess.
Yeah, some forced saving. It's good. Yeah.
I mean, there's a lot of financial information out there that's necessary. That's why, again, I say you got to call Joseph, right? Get that information. But it will help, hopefully, bridge some of those income gaps that we're seeing right now, as long as people use that wisely.
Okay, well, we have a couple of minutes left in the segment. If you have a question, call us 210-308-8867, 210-308-8867. This is Talk Law Radio, where we help you discover your legal issue blind spots. Talking to Anna Cruz and Joseph Warren about income tax year-end planning. What are some other deductions or strategies that you tell everybody about?
Well, we talked a little bit about estimated taxes, or maybe I just made that up. But the point is...
We did before the show.
Okay,
so
that's what it was.
Yeah.
So it's really important that you meet with a tax professional, especially if you're a business owner or a high-income earner, before the end of the year so we can pay estimated taxes if you're supposed to. One, it avoids penalties. But two, something that a lot of business owners don't know is that business taxes are due January 15th, not April 15th. So as of January 15th, you're accumulating those penalties, and you could use that money for something else in your business. We don't need to be giving it to the IRS. So meeting before January 1st so that we can employ those strategies. An additional one that I want to touch on really quickly is 100% bonus depreciation. So that's something that's coming next year. So if you want to talk a little bit about how the IRS can buy you free stuff for your business, give me a call and we can talk about it.
Oh, that's awesome. Game changer.
Mm-hmm.
Okay. Well, we have just a little bit of time left. We have somebody on the line, but we might have to take that next segment. So we've been talking about year-end planning, and Joseph, any thoughts?
Yeah.
30 seconds.
Yeah, just make sure you funded your retirement accounts if that's a part of your strategy, your IRA, your 401k, that's deductible on your taxes. Roth IRA, make sure you do that before the end of the year. And HSA is also important if you have one of those. And big purchases like equipment, car purchases can help business owners a lot at the end of the year.
Awesome. We'll be right back. Stay with us.
This has been Talk Law Radio with attorney Todd Marquardt, brought to you by the Marquardt Law Firm. You can learn more at marquardtlawfirm.com. And be sure to listen to the full Talk Law Radio show Saturday mornings at 11 on 9:30 a.m. The Answer.
Most families don't realize they have hidden legal blind spots until it's too late. Wills, trusts, Medicaid planning, even protecting a business. These are the kinds of issues attorney Todd Marquardt helps uncover before they become problems. Todd is the host of Talk Law Radio, where each week he guides listeners through the legal challenges families, veterans, and business owners face, while showing them the practical steps to protect what matters most. Catch Talk Law Radio, Saturdays at 11 a.m. on 9:30 a.m. The Answer, 6:30 a.m. The Word, and now in Houston on AM 1070 and 103.3 FM The Answer, or anytime on YouTube. Planning isn't just about documents. It's about peace of mind, security for loved ones, and building a legacy that lasts. Don't wait for a crisis. Do it before you die.